Yesterday, we got that highly anticipated rate cut from the Federal Reserve. So why are we seeing interest rates on the rise today? What's going on, y'all? My name is Kevin Weedmark, aka The Mortgage Mouth, coming to you with another episode of the Daily Dose, bringing you up to speed on what's going on in the marketplace, how it's affecting those interest rates, and what we can possibly expect for the rest of the week. So let's dive in. And today, what's going on is we got data. If you recall, I mentioned it yesterday. The last time the Fed cut in early September, that's not the last time they cut, but when they cut in September of 2024, we saw the same reaction. We saw the Fed funds rate cut. They actually did a half a point. I believe highly political at the time, but then data came out. And if you listen to what the Fed had to say yesterday, I mentioned their statement was going to be really important. And if you look at their statement, they indicated that the economy and the slowing in the labor market was now their number one. Although inflation remained elevated, their concern was the labor market. And now today we get data, particularly the initial jobless claims, showing that it's not as bad as they initially thought. We had some revisions to last week. We also saw that number come in below forecast. And again, it's data points like this that are going to rapidly move markets, because what it's going to do is if you get an economy where the labor market starts to stabilize, or the economy winds up not being as poor as people had anticipated, and you still have elevated inflation, well, we might not just get those two rate cuts that we're looking forward to for the rest of this year. So the market had already baked those in, right? The market had already baked in yesterday's cut, and they've already baked in these future cuts. That's where the 10-year Treasury is sitting, is based in anticipation of those rate cuts and based on data that's going to be coming out. So when that data comes in against us, you're going to get higher rates, which is what we see today. So the message, it's been the same message forever, at least for the last 12 months. You need to be talking to your mortgage professional. You need to be in tune with what's going on so you can highly anticipate of where you think rates are going to be going, because right now I think they're going to remain elevated, and you need to be in a position to take advantage of those valleys. The valley was before the Fed made the announcement. That's what I was telling all my clients. That was the valley. And now you're going to have to ride these brief peaks. I think interest rates will come down because I think you'll get some data that will correct that. But now we're going to have to be in a wait and see mode to next week. And that's just how it's going to have to be. Talk to you tomorrow with another episode. Don't forget to hit that subscription button. Cheers.